DeepSeek just pulled off one of the strangest deals in the history of artificial intelligence. It raised $7.4 billion, its first outside money ever, and in return, the investors who wrote those massive checks got almost no power at all, no board votes, no say in how the company is run, and their cash locked away for 5 years. So why would the biggest names in tech line up to take that deal? The answer tells you everything about where the AI race is really headed. Let's start with the raw numbers. DeepSeek, the Chinese startup that stunned the world last year, just closed a funding round worth 50 billion Chinese yuan, about 7.4 billion US dollars. That single round pushed its valuation past $50 billion, with some reports putting it as high as $59 billion. For a company that barely existed in the public eye 18 months ago, that is a staggering rise. But the money is not the real story, the structure is. Here's the twist. Most of that $7.4 billion did not actually go into DeepSeek. It went into a separate limited partnership, essentially a holding vehicle controlled by DeepSeek's founder, Liang Wenfeng. Investors bought into that vehicle, not the company directly. And that single design choice changes everything. Because of it, the outside investors who poured in billions received no voting rights whatsoever. They cannot steer the company, they cannot force a sale, they cannot even pull their money out. Their capital is locked up for 5 full years. In Silicon Valley, where investors usually demand board seats and control, this would be almost unthinkable. In this deal, they signed it willingly. And who exactly signed? Some of the largest companies in China. Tencent put in roughly 10 billion yuan, around $1.4 billion. CATL, the world's biggest battery maker, added about 5 billion yuan. These are not naive players, they are giants. And they accepted no votes and a 5-year lockup to get a piece of DeepSeek. The person who came out on top is the founder himself. Liang Wenfeng personally contributed about 20 billion yuan, roughly $3 billion, making him the single largest backer in his own round. Think about that. He raised billions from outsiders while putting in the most himself, and he kept near total control. He now sits on top of one of the most valuable AI companies on Earth, answerable to almost no one. There is exactly one exception. China's National Artificial Intelligence Industry Investment Fund, a state fund, is the only investor that put money directly into DeepSeek itself. And it is the only one that kept full voting rights and walked away from the 5-year lockup. In plain terms, every commercial investor gave up power, but the Chinese state did not. The government fund holds structural priority over Tencent, over CATL, over everyone. So step back and look at what this picture actually shows. The two parties with real control over DeepSeek are the founder and the Chinese state. Private capital got the privilege of paying in, and very little else. That is a fundamentally different model from how AI is funded in the United States, where investors like Microsoft, NVIDIA, and the venture giants expect real influence in exchange for their billions. Which brings us to the big question: why would anyone agree to this? The answer is fear of missing out on a historic scale. DeepSeek is the company that, in early 2025, released a model so cheap and so capable that it briefly erased over $1 trillion from U.S. tech stocks in a single day. It proved you did not need endless American chips and endless cash to build frontier AI. For investors betting on China's technological future, being shut out of DeepSeek is scarier than getting a hard deal inside it. So they took the terms, and that is the real lesson here. In the West, capital usually buys control. In this deal, capital bought a ticket, nothing more. The founder kept the wheel, the state kept the veto, and the money simply came along for the ride. It is a glimpse of a model where patient, state-aligned capital and a powerful founder matter more than the rights of outside shareholders. The question now is whether that model wins. Can a company that treats its investors this way keep attracting the billions it needs to compete with OpenAI, Google, and Anthropic? Or does giving up all that control eventually scare the money away? For now, DeepSeek has the leverage, and it is using every bit of it. So, what do you think? Is this the future of AI funding, or a deal only DeepSeek could get away with? Drop your take in the comments. And if you want the biggest moves in AI and money broken down like this, subscribe to Mind Blitz. We do this every single day.